Have you invested in crypto, unsure about what that holds for you in the future? Well, we are answering this and more in today's video, so stay tuned till the end to know everything you need to know about the future of cryptocurrency. Let's begin. The status of cryptocurrency in 2021. In April and October, we saw Bitcoin achieve new all-time high prices, regulatory conversations with the potential to have a significant influence on the sector, and increased institutional buy-in from major corporations. Meanwhile, public interest in cryptocurrency has soared this year, thanks to everyone from longtime investors like Elon Musk to that kid from your high school on Facebook. It's a hot issue not only among investors, but also in popular culture. According to Dave Abner, head of global development at Gemini, a renowned cryptocurrency exchange, 2021 has been a breakthrough in many respects. The cryptocurrency business is receiving a lot of attention and emphasis. However, the sector is still in its early stages and is continually changing. It's tough to forecast where things will go in the long run, but experts will be watching issues like regulation and institutional acceptance of crypto payments in the next months to get a clearer feel of the industry. What's next for cryptocurrency? Well, making an accurate and affirmative statement would be impossible, but predictions have certainly been made about the future by experts, and today we have 5 such predictions which may be proven to be true in the coming future. The regulation of cryptocurrency. Experts have previously spoken about the possible regulation of cryptocurrency. Expect to hear more about Bitcoin legislation in the future. Lawmakers in Washington, D.C. and across the world are attempting to find out how to make cryptocurrencies safer for investors and less enticing to hackers by enacting regulations and standards. China declared all cryptocurrency transactions illegal in the nation in September, thereby putting a stop to any crypto-related operations within its borders. Things are not as clear in the United States. Chairman of the Federal Reserve, Jerome Powell, has stated that he has no intention of outlawing cryptocurrencies in the United States, while SEC Chairman Gary Gensler has continuously stated his agency's and the Commodity Futures Trading Commission's roles in monitoring the market. Investors are likely to be harmed if stronger regulation is not implemented, according to Gensler. Furthermore, the IRS has a vested interest in ensuring that investors understand how to report virtual currency on their tax returns. Regulation, like most things in Bitcoin, is fraught with difficulties because U.S. corporations and investors are now operating without clear standards. Unambiguous regulation would remove a huge obstacle for Bitcoin. Do you back this prediction? Well, we can only wait to find out if it's true or not. The prediction does not seem pretty legitimate to us. But what would these regulations mean for investors? Well, that is a fair question to ask. Recently proposed legislation might make it simpler for the IRS to track down examples of crypto tax avoidance. However, investors should already maintain track of any capital gains or losses on their crypto holdings. However, the new laws may make it easier for investors to disclose cryptocurrency transactions correctly. This is because if the bill passes, exchanges will be required to send 1099-B tax forms to investors that include cost basis information. The burden of crypto tax reporting will be greatly reduced as a result of this. In already unpredictable markets, regulatory news can have an impact on the price of cryptocurrencies. Because of market volatility, investing professionals advise restricting cryptocurrency investments to less than 5% of your whole portfolio, and by never investing an amount of money you can't afford to lose. Crypto EFT approval. On this front, there has already been a huge breakthrough, with the first Bitcoin ETF just debuting on the New York Stock Exchange. The development provides a new, more traditional approach to investing in cryptocurrency. The Bitcoin ETF allows investors to acquire cryptocurrencies directly via traditional investing brokerages, such as Fidelity or Vanguard, where they may already have accounts. According to Gensler, they would do it in the equities or bond markets, and he believes that consumers would want it there. However, some argue that the BITO ETF is insufficient since, while it's tied to Bitcoin, it does not really own the cryptocurrency. Instead, the fund invests in Bitcoin futures contracts. Experts suggest Bitcoin futures may not accurately reflect the price of Bitcoin, despite the fact that they follow the overall patterns of the actual cryptocurrency. For the time being, investors must wait for an ETF that owns Bitcoin directly. The SEC has considered ETF clearance numerous times in recent years, but BITO is the first to receive permission. It's too early to say how many investors will flock to BITO, but the fund saw a lot of activity in its first week. In general, the more traditional financial products that include Bitcoin assets, the more Americans will be able to participate in and influence the crypto market. You may add crypto to your portfolio straight from the same brokerage with which you already have a retirement or other traditional investing account, rather than learning how to navigate a cryptocurrency market. Investing in a crypto ETF like BITO, on the other hand, involves the same risk as any other crypto investment. It's still a risky and speculative investment. You shouldn't invest your money in a crypto fund if you're not ready to lose the money you put into crypto by buying it on an exchange. Consider if you're willing to incur the risk of including cryptocurrencies in your portfolio. A broader adoption of cryptocurrency. In 2021, mainstream corporations from a variety of industries have expressed interest in cryptocurrency and blockchain and have even invested in it in some circumstances. AMC, for example, just stated that before the end of the year, it would be able to take Bitcoin payments. PayPal and Square, for example, are banking on cryptocurrency by enabling consumers to buy it on their platforms. Tesla continues to waver on whether or not it would accept Bitcoin payments, despite the fact that the firm owns billions in cryptocurrency. Experts expect that this type of buy-in will become more common. According to Abner, the business has experienced a great flood of interest, which will continue to fuel the industry's expansion for some time. Some analysts believe that in the second part of this year, larger worldwide organizations will accelerate adoption even further. Whether it's Amazon or the large banks, we're seeing institutions become engaged in cryptocurrency. Amazon, as a large store, may start a chain reaction of others adopting it, giving it a lot more legitimacy. Indeed, by publicizing a job advertisement for a digital currency and blockchain product lead, Amazon has recently fueled suspicions that it is moving in that direction. Walmart is also looking for a blockchain specialist to supervise its strategy. While most individuals don't see the value in paying for products with cryptocurrency right now, more merchants taking payments might change the scene in the future. It will likely be a long time before spending Bitcoin on products or services is a wise financial move, but more institutional acceptance might open up new use cases for common people, affecting crypto pricing. Nothing is sure, but if you buy cryptocurrencies as a long-term store of wealth, the more real-world applications it has, the higher the demand and value. Do you think this is a good prediction? Make sure to tell us by commenting. The future outlook of Bitcoin. Because Bitcoin is the largest cryptocurrency by market value, and the rest of the market tends to follow its patterns, it is a good predictor of the crypto market in general. Bitcoin's price has been on a roller coaster ride so far in 2021, reaching a new all-time high in October for the second time this year. This is the year's second record high, following a prior high of $60,000 in April and a subsequent dip to less than $30,000 in July. Because of this volatility, experts recommend that you limit your crypto investments to less than 5% of your whole portfolio at first. But how far can Bitcoin ride? According to Kayana Danielle, author of Cryptocurrency Investing for Dummies, Bitcoin's background may hold some insights. Most people expect Bitcoin to have short-term volatility and long-term growth. The volatility of Bitcoin is just another incentive for investors to stick to a long-term strategy. If you're purchasing for long-term gain, don't be concerned with short-term fluctuations. You should avoid looking at your Bitcoin investments as often as possible. As experts continue to warn us, emotional reactions to market swings, whether up or down, can prompt investors to behave rationally and make judgments that result in financial losses. In conclusion, we might guess what value Bitcoin will have for investors in the months and years ahead. But the fact is that it is still a new and speculative investment with no history on which to make forecasts. No one truly knows what a particular expert believes or says. That's why, for long-term wealth accumulation, you should only invest what you're willing to lose and stick to more traditional assets. Tell us by commenting how many of these predictions do you think will come out to be true in the future. We hope you guys got all your questions answered, and be sure to comment and tell us if you're invested in cryptocurrency. That is all we had today, and it's a goodbye for now.